Good morning, good afternoon, and good evening, depending on your time zone. Welcome to today's weekly update. The price has been correcting like we did predict, but now we are much interested in what is the next line of action. So what is price going to do? For me, the way I look at trades, I look at the structure, and I look at the wave within that structure. Is it completed? What do I mean? If you are new to this channel, this is a wave. This is a wave. This movement to the downside is a wave. Then we're beginning to see this is one structure here. This is another structure here. So if you want to look at this structure, how do we say? We'll say this is like a movement to the downside to this point. That's one. A movement up, that's two. Another movement to the downside, that's three. A movement to the upside, that's four. And another movement to the downside, that's five. So we can say, even on the weekly time frame, you can see that this is a five-wave structure, or five structures wave to the downside on this upper time frame. So that's the way we look at the wave and the structure within that wave. And is it completed or not? So whatever time frame that you are looking at, we don't read the candle isolatedly, because when you see price action, because price action is really what is the mood of the candle, regardless of the time frame of that candle, be it higher time frame to the lowest time frame of 1 hour, that is most of the time it's sensible for anybody to take. We look at the time frame within the structure, what it's saying. For instance, look at this candle here. When you look at this candle here, you say this is like a trusted candle that should send the price more to the downside. That means we expect the dollar to grow more weaker. And we did say that even before that happens, because within this shorter time frame, we felt that this one had completed 5 waves, which you cannot appreciate here, and that this to the upside should not break this, where this candle closes here. So you can see there's a wick. There's a wick here, and there's a short wick and a long wick here. So we don't expect price to even come to the wick, but where this thing closed, price should not break beyond it. And where exactly it's going to fall backwards and begin to descend again, it's when you now begin to dissect the internal structure of what is cooking here. So we look at the wave on all the time frames. We look at the structure within those waves. We look at what the price action is saying, but price action for me is not enough. Support and resistance is not enough. I think the last week video, if you watched it, if you have not watched it, go and watch it. If you really want to understand how you use your trend, support and resistance to guide your structure within a particular wave until that wave is completely done. So the same thing that you see here on US dollar index is what you probably see on the DXY with little variation. So on the DXY also at this point of 103,878, we don't expect price to break. And if you look at euro dollar, euro USD, inversely is the same. So we don't expect price to take the low of 10380. We don't expect price to take the low of 10380. Would it take that low? I don't think so. But we'll look at the structure. The price has been bearish, but we know that the overall direction is to the upside for now. If I zoom, because you may not see that, you may be seeing, oh, it's bearish. You can see this, oh, is bearish, but overall direction is what? It's bullish. You can see now. From here, we've been moving to the upside. So the overall direction is bullish now. Until probably we've had like 100 extension to the upside, they will now begin to look at what the price is going to print again. So let me go inside of a DXY, then we'll now break it down again on euro dollar. So this is the weekly. We quickly push to the daily time frame. So this is the daily time frame. When you see this formation on the daily time frame, because we've been come to the downside and we said we are correcting. When you see this formation and you see this candle, oh, you can quickly say that, okay, the price has done this. Look at this engulfing candle. Oh, you're expecting the price to correct for more upside. That is not what it is. That is not what it is. We see this movement to the upside here as the first wave of correction because we are correcting. And this in the middle as the second wave of correction, which is B. But what we do know of corrective wave is that B or the C leg can be quite impulsive. And when it's impulsive, this is what you see. You must understand that this engulfing nature is the last part of the correction to the upside, and the price is coming to the downside. So that is the way we read it, even on this time frame. Because if you go to the 4-hour time frame, you'll be seeing engulfing candles. So this is what you're going to see. But this is A for us, the B part, and the C part, and which we want to believe we are done. If you're not done, probably we are going to correct and break the top one more time before we begin to come down. Now, if I go to the 1 hour, that's where I'm going to stop the scaling. That's where I'm going to stop. On the 1 hour time frame, we had seen this move as a possible A move, and in the middle here as a B move, and this is the last part of the move to the upside. There's the last part of the move. This is like a 1, A, B, C of 2, and this is like a 3, inside of a 3, 3, 4, 3, 5, and probably we are seeing that this could give us the fourth wave, which is an A, B, C to the downside, and this is moving to the upside, you know, as the last part of the wave. So which may have ended here, capping this point. It may have ended here, capping this point, or it may still go a bit up. But what we want to see, we want to see a movement to the downside. That is what we are expecting. So it may have ended here, but we are expecting a movement to the downside. If we look at . So what the price has done in our movement to the downside here, we have done like an ABC. Oh no, the first part of it, which is like a 1 and a 2. We believe that this is the third wave here, and that the third wave here, so it's like a 1 and a 2, and this is a third wave. So this to the upside is seen as probably the first part of the third wave, and this is the second part of the third wave. So 3-1 and a 3-2, that's what we see. A 1 and a 2, a 3-1 and a 3-2. So correcting the entire run from here down to this point. And now we are at 61.8. If I'm correct, we are 61.8. If I quickly bring out my drawing, okay, almost at 61.8, because 61.8 is here and this is 72. We don't expect price to take here if you watch the last video. So the price technically may still walk up to this point before falling. So price may still go up, touch this 61.8 before falling or not. But what we are expecting is that we are expecting a movement to the downside now to continue. So we are done with probably a WXY formation or ABC as we want to label it, because this is like a three-wave, a three-wave, a 1, 2, 3, which is what you will see in the WXY, a 1, 2, 3 to the downside, which is what you see in an X, this movement. So it's a 3, 3 here, but the last one is a 5-way, so which makes it looks like an ABC, because if it's a WXY, you will see probably a 3, 3, double 3 correction formation. So this is looking like a WABC, which is like a 5-wave structure, a 1 and a 2, a 3, a 4, and the last one may touch this place. The same thing you may see on the US dollar index. Let's look at that. If we are touched US dollar index on the US dollar index, so we are almost touching as a matter of fact, yes, we are almost touching. This is 61.8 here, so it's almost there as well. So it's going, I think there's still a little more movement to the upside to touch this area before price is sent to the downside. So that is what we are expecting. Of course, like we said, when you see that the trend line that connects 1 and 2 here is broken, so this wave is completely gone. You would have noticed from moving in connecting this to the downside has told us that the wave 3 is gone. Now this to the upside, breaking 38 to the upside, has told us that the wave, the all of this wave is gone completely. So we are doing a new wave to the upside. So when you will expect this wave also to be done is when these from here, if this is taken to the downside, it tells you that this is done. Now, if you want to do it wave for wave, the wave for wave, it's looking at this wave, which is the first part of the wave crossed here, which means that this wave to the upside was done by this crossing it. And the second part of the wave from here to here, you join to this. So the second part of the wave was done by this crossing it. I'm just teaching you, and you have to. And this also, it's a bit difficult because it's almost aligned here. But if you look at the internal structure of, if you go more inside, but we just need a push. We need a push. This is almost done, really. So, but we still need a push. If you go on the, let's see if we have more deviation on DXY. On DXY. Okay. I think we have a little more deviation on DXY. So when you connect these to these. So a break to the downside means that this also is gone. So we still need a little more movement to the upside, but potentially price may still visit this place where this particular one is extended, and it may just click here. But we are expecting a fall. As a matter of fact, I don't expect that price is going to break this. I don't expect that price is going to break this upper trend resistance before falling. Now, going to the euro dollar is the same, but in an inverse, in a reverse direction. So when you see this, anybody will read this as, okay, we are trying to, this is an engulfing candle to the downside. We correct for more for no. This has reached its limit. What we may likely get here, because let's look at this closely. You may begin to, if you are in a buy from here, good for you. If price would go up more to come down, it will break this bottom here. Once price does that, to break the bottom, then we are going to go up again. But if you are in a buy here, it's good for you, because this may actually just be collectively dragging to the upside before gaining momentum. All of a sudden, when you are thinking that it's going to come down, it gains momentum, break the top, and begins to go. So, but looking at the internal structure of this wave itself, it looks completed, because we can see this as a 1 ABC2 of a movement, and that these within wave 3 may have done a 3, a 4, and a 5. This may have completed the entire run, and that this is going up. So, one of the things we could do here, let me go somewhere so that let's take this. So one of the things we could do here, if I bring out a drawing, so one of the things we could do here is to see this point here as a point of 2. This area as a point of 2, the upper limit of 2, and that this is a point of the last wave. So if we are still within wave 4 of a major, if this is just a 4, the primary 4, we are broken the primary 4, and that's it's telling me that we are not breaking to the downside again on this one. But let's see, to be on the safe side, because of manipulations, little manipulations that could occur with price. And this is where to break really for the 4th major. This is where to break really for the 4th major. So we are still below what I would say the 4th major is. So we are still below that because of these. Because of these, this may be dragging to give us a 1, 2, 3 to the down, 1, 2, 3, 4, 5 of the last wave to the downside, which may just kiss the bottom or go below it by breaking here before price, is sent to the upside. So, what I would advise is, if you are in a buy here, good for you. But if you're not in a buy, you may be lucky to see price movement to the downside. And if that is going to happen, if I go to the 15 minutes time frame, if that is going to happen, we may see this movement, because this may actually be the first, and this may be a 2 here because of different manipulative configuration that we are getting here now. This is quite manipulative. But I think the upper time frame has given us So the upper time frame has given us what we need. Now, looking at these movements, if this is 1 and this is 2, yeah, there's a reaction here below 61.8, which may mean that, oh, in the first wave here, this is 1 and this is 2, and we're going to break up. We need to break the top here before we know that, yes, we are going up again. Otherwise, because the last wave of 5 also can be corrective, really corrective, this might be seen as a 1 and a 2 around this area. So if that is what it is, that a 2, a 1, a 2, then if we break the bottom here, it means that we are going to do a 3, probably break the. So the area we are looking at, sorry, the area now we are looking at will now be between this area here. We need to see price movement within this zone. So I'm just doing a pinpoint analysis for you guys, a pinpoint analysis to decide if this indeed is the first impulse of the movement to the upside or not. Okay, so but of course we need to break 190 to the upside, 1.0900 to the upside to say that, okay, we are back up now. So this is what we need to break to the upside to know that we are back up. So once we break here, we are going up again. So but within this corrective format itself below here, so if we should take this to the upside, it means that we are going to break this. Because if this can be a 1 and a 2 here, and if we break this to the downside, it means that this one becomes the last 5 waves of a 1 and a 2 here, and we are dipping further. That is just the difference. These are what will confuse you. It may mean that price wants to go up or anything within this time frame. You cannot never trust that this is like a descending triangle or whatever you want to call it. You never can trust this because there's a breakout here. No. A consolidation within this frame, you cannot, but this and this is very important to us. So if we take this to the downside, go to where 161.8 or sort of 61.8 is and look for your buy there again. So because the price is almost even eating that area. Let me see. On a 1 hour, so on a 1 hour time frame, yeah, from here. So from here to the upside, so we want to see where 61.8 is. So the 61.8 61.8 is here. So price may just break the bottom, come to 61.8 and bounce off. So that is what we can expect. So this may just do a 1, a 2, a 3, and a sharp movement of probably it could be when you see the last impulse here, because this might just be the first one. So the third wave might just be an impulse to the downside, stop around this area to do a 4, and the 5 comes there, then they go up. So is that we go up from here or we still break below on the euro dollar. So the direction of movement is to the upside. That is what we are saying on euro dollar. Now on gold, let's go to gold and see what gold is trying to pinch. Gold or 1 hour. So let me first show something that I said, and which is not what the price is trying to do now. Let me try and zoom this in. Let me try and zoom this in on a daily time frame. I thought that because I said so, like when you see this price action here, it could mean a morning star, also an evening star. So we said it could be a configuration of an evening star that may send the price more to the downside for a deep correction. But with this recovery to the upside, this is highly corrective. So it's not likely we're going to see that deep correction to the downside. That is one thing I can confirm to you. So we want to see how price will correct within this, where price broke here. I'm seeing the likelihood that price may still come around this area before bouncing up. So I don't expect a very deep correction. That is what I'm trying to say. Now, with this configuration here, I don't expect a very deep correction. This is highly corrective, very corrective. So I don't expect something to come around this area or this area. I do not. But we are expecting the movement to the upside on Eurodollar, and we're expecting that the dollar to fall on DXY US dollar index. The gold is not setting up like that. So we have to be very careful. Gold is not setting up like that. I see gold still trying to go to the downside a bit. So for me, gold has done like an ABC here, which may turn out to be a WXY. So this may be a W, this may be an X. You know, what gold has done here looks like an X. And this is not a short Y because it didn't break here. So I'm saying that this might just give us like a 1 and a 2 of the last move. That is what I'm seeing on gold. I'm seeing this as a 1 and a 2 of the last move, and that this is going to grow and get to like a 161.8. That is what I'm seeing. So I'm seeing that gold is still going to break here. So gold may take the bottom here, you know, go back up. If it does that, go back up. If you're in a buy, exit your buy. Allow gold to break down the more. That's what I can see. The movement is to sell. Sell the gold and look for your buy after the break of that. Okay, let me go inside of a 1 hour time frame. That is what I can see on gold. You have to be very careful. That's what I can see on gold. I may just do a little analysis here. Do I have some drawings here? I doubt that. Okay. So I doubt that. This is what I can see here on gold. So this is what I can see on gold. Just a quick one. So this is what I can see on gold. And maybe I should just change that. So I see this as the first movement. Price probably will take this, go up again, get out of your buy. That is what I can see here. That is what I can see here. On the 1 hour, So this, for me, is likely to pull beyond. So I'm looking at this last aspect alone now. I'm looking at, because I'm done, it's done with the first wave of it. So I can take this as a 1 here. Then to the upside, that limit, I can take this as a 2 here. So I will be expecting this to go beyond past 100 here. So I'm expecting this to still come down to, don't gamble, I'm expecting this to come down to this point. So we're expecting price at about 221.30 or 29. That's where I expect this to get to. And that's quite some movement. I don't think price is going to, with this formation, price will just shock you. Price will break below 21.45. Price will break below 21.45, I can see. So, and there's a gap here, which you don't want to be taking. Price, that's about 160 pips to the downside from 100. So that is what I'm saying, setting up on gold. So if you now look at the entire run, I can now paint these. Yes. So that's the last place I expect gold to come to. Now taking this as a WXY, labeling this as a W, and X. So, and a Y is more of structure than anything. So it's more of structure than anything. Okay, so if you now take that as a WXY, so we can now take this as the first part of the move from here down to this point here of W. Then we'll go back to X here. Go back to X here. So what we are saying that the mood here on the bigger time frame, the mood is setting the price. So just expect that these are the area the price may test, because they may take the mood of the price on the upper time frame here. They may take it as where to get to. They may take that WXY as 100, be looking for your price movement to the upside from this point. Maybe not this point, you know, from this 100 point. And you look at also the price movement at this place, and this will just be 21.06. That may be the last place based on what we can see. So I don't expect price to go beyond here. So this is the first place you should be looking for your price based on the upper time frame analysis. So this is the first place you'll be looking at. Then if it breaks below, then this is the area you should be looking at. But I think if it breaks below here, just set a little below here for your stop loss for this fall here. This is like, that's how to do it really, if you don't want to lose. That's like a 6 pips move. So if you do a 6 pips move here, so watch it. If it breaks below this point here, then this is where it's coming to, because it's big. The movement there is big, is huge. That's another 22 pips. That's another 22 pips. That is what I can see setting up on gold. That is what I can see setting up on gold on this time frame. On the 1 hour, on the 4 hour, back to the 4 hour. How it's going to do that, this is what I see setting up. So if price is able to hit this, if we look at what it is like on the larger time frame to see what kind of correction it's going to give us from that base. We're going to set the base a bit up. Let me see. I'm going to set it a bit up, okay? I think it's going to go a bit up. We touch this area. Good. So this we go up a bit. So I think you should be expecting price around 38. So that is what again we can do, because if price breaks here, it won't, on the larger time frame, it might not make any sense. It's breaking this already. So it's done. It's done with this wave completely. So this is like a wave 3 for now. This is like a 1 and a 2, a 3, and a 4. This is the area you should be interested in, really. That's where you should be interested in here. So we are looking at the larger time frame, everything together to begin to apply ourselves. So what we are saying is that if there is a break around this area, if there's a break around this area, this is the strong area, not here. This is the strong area you should be looking for your price to bounce back to the upside. And so with that price, we will be sent back to the upside for a big move. And that from here to this point, it's about 800 pips. So you don't want to be, so we should be looking for a sell. If the price comes here and bounce up, take a sell. Now, after the break of this to the downside, just be trading your stop loss until it goes beyond and gets to this area. So that's what you can do on gold. So with that, I've come to the end, and we're going to look for our buy around this area. Come to the end of today's weekly update. See you during the week.